Hi, everyone. I'm Lynn. Today's episode has three parts, and I promise we're not doing the usual short term earnings drama. We're talking about what actually shifts your long term opportunity set. Part one is satellite communications, because this whole space is clearly back in an upcycle. I'll walk through a few names people keep asking me about: ASTS, Iridium, Viasat, and Globalstar. We'll look at how they have been moving and whether there is still a real setup here. Then parts two and three are two single stock deep dives: Palantir and Nebius. Both just reported Q4 2025 earnings. Both looked strong on the surface. But I want to answer the real questions investors are quietly asking. For Palantir, Michael Burry turned bearish right after earnings. I actually think that sets up a better entry, not a reason to panic. For Nebius, management highlighted a 20+% adjusted EBITDA margin number. I'm going to explain what that number really represents and whether the company is truly making money yet. And before we jump in, quick reminder: if you like this kind of research driven, no hype breakdown, subscribe. It helps the channel a lot, and it tells YouTube to show this to more people who care about fundamentals, not just headlines. All right, let's start. Part one: satellite communications and why spectrum matters. In the space supply chain, satellite communications is one of the most important layers. It is not as flashy as rockets, but it is where real infrastructure economics show up. If we zoom out, there are basically seven major players people talk about. Three big private or semi private platforms. First, SpaceX's Starlink. Second, Bezos's Project Kuiper, which many people now refer to as Amazon LEO. Third, Eutelsat OneWeb. And then four public companies that retail investors can actually buy: AST Space Mobile, ticker ASTS; Iridium, ticker IRDM; Viasat, ticker VSAT; Globalstar, ticker GSAT. Let's do a quick scorecard using the past year or so of price action because the trend is very clear. ASTS first. Around January 2025, it was roughly in the $20 area, and then it ran to around 80, basically a four-bagger. At the peak just a few weeks ago, it even touched about 130, which is wild. Yes, it is volatile. It swings. But the higher level trend has been undeniably strong. Next, Globalstar. This one has been steadier. It pulled back over the last couple months, from the 70s down toward the 50 to 60 range. But zoom out, it also moved from around 20 in early 2025 to around 60, roughly a triple. Not bad at all. Now, the name that has been the most disappointing in recent years is Iridium. But here's the interesting part. After the latest quarterly report, it jumped about 15%. So the question becomes, is this the beginning of a reversal? If you look at the longer history, you can see why people have mixed emotions. Iridium topped around 64 back in May 2023, and then the trend rolled over hard. But before that, it was an absolute monster move, going from around $8 in 2016 to the 60s, about an 8 times. More recently, it sank into the teens, and now it has bounced back to the low 20s, around 23. I'm not here to sell you Iridium today. I'm saying, if you want a possible value pocket in this group, Iridium is the one you study, especially after management started hinting that their L-band spectrum is high quality and could be monetized if the price is right. Now let me talk about the black horse, VSAT. This one surprised me too. On the weekly chart, it spent a long time basing, then it broke out. I bought it during that breakout period, and I sold around 28 because it already felt like a big win. Many members in my community also captured solid gains. Then VSAT kept running, all the way toward 50. Even after pulling back a bit, it is held up in the 40s and 50s area. From the low around 10 to the high near 50, that's a 5 times move. And compared with ASTS and even Globalstar, Viasat's path was actually more stable. It is rare to get both steadier trend and bigger multiple, but that's what happened. And yes, do I regret selling early? Not really. The bigger point is, this was a real reversal after a long base. And reversals like that are exactly what you want to learn to recognize. So why am I grouping these companies together? Because of one asset class that the market keeps underestimating until it suddenly doesn't. Spectrum. Spectrum is scarce. It is valuable. And recently, it has become even more strategically important because we are seeing real transactions. EchoStar, for example, has been selling spectrum to two types of buyers, traditional carriers like AT&T and also Starlink. Once you see spectrum deals happening, you stop thinking of these satellite communication companies as boring legacy businesses. You start viewing them as holders of strategic assets that can be used, leased, partnered, or sold. Now, do I think all of them are still buys today? Not equally. I'm personally very optimistic about SpaceX long term, which also makes me a bit more conservative on the public names that have already tripled, quadrupled, or quintupled. ASTS, for example, I'm the least enthusiastic about right now. The valuation is high, profitability is still not there, and the business is effectively competing with Starlink at the platform level. For me, that is not the risk reward I want at this price. On the other hand, the more traditional players, especially the ones with meaningful spectrum, can be the next best opportunities behind the private giants, if you get the price and timing right. So the takeaway for part one is simple. This sector looks like it flipped from pessimism to recovery compared with a year ago. If you want a possible underfollowed angle, study spectrum, not just revenue, because spectrum is often what creates sudden upside events. Right now, let's move to the two single stock sections. Part two, Palantir, and why the bear case might create the entry. Palantir just posted Q4 2025 results, and I already covered the earnings in a prior video. But after that, Michael Burry publicly leaned bearish, and a lot of investors got nervous. Here's my view clearly. I treat that as noise and potentially as opportunity. I bought Palantir before the bearish commentary. My average is around the 100s and 30s, and the stock is roughly 131 right now. So I'm not doing anything dramatic. If the stock sells off harder and we see something closer to 100, I would be happy to add. Technically, the chart looks ugly. It lost key support. It broke below important moving averages. It could keep drifting. But I'm not building my thesis on a weekly chart. I'm building it on business fundamentals and what Palantir represents in the AI cycle. Look at the recent quarters. Revenue growth has re-accelerated. The operating margin trend has improved. Adjusted operating profitability is strong. The rule of 40 type profile has become honestly ridiculous. This is why I'm still high conviction. The market argues about valuation multiples. Fine, but step back and ask the more important question. Is Palantir an AI victim or an AI beneficiary? To me, it is clearly an AI beneficiary. It is not getting replaced by large language models. It is one of the best positioned companies to operationalize large language models for enterprises and government environments. That's the core idea. So, if the market wants to hand you volatility because a famous short seller says a scary sentence, your job is not to panic. Your job is to decide whether the business trend changed. If the business trend did not change, the volatility is just price, not information. Part three, Nebius and what that 24% margin really means. Now let's talk about Nebius. They reported Q4 2025, and the stock moved up after earnings. On the surface, it looked good. Full year revenue was about 530 million, which landed within the company's guidance range of 500 to 550 million. ARR ended the year at about 1.25 billion, above the guided 900 million to 1.1 billion. For 2026, the company reiterated ARR guidance of 7 to 9 billion. So here is the truth. 2026 is the real acceleration year, not 2025. And yes, two major customers, Varen and Meta, had no delivery delays, which helped sentiment. We all saw what happened to other names when delivery timelines slipped. But now we need to talk about the headline that caught everyone's eye. Nebius highlighted an adjusted EBITDA margin of 24% in Q4. Sounds amazing, right? Here's the important clarification. That 24% number is for the AI infrastructure services segment, not the whole company. Nebius today is basically three pieces. AI core infrastructure, Toloka, which is a smaller piece, and Avride, which right now contributes basically negligible revenue. So yes, the AI infrastructure segment is showing strong margin. But the other parts are not profitable and they drag the consolidated numbers. In Q4, the company-wide adjusted EBITDA margin was around positive 7%. For the full year, adjusted EBITDA margin was still negative 12%. That means Nebius is not fully profitable yet, even if one segment is improving fast. To put it in context, I compared it to CoreWeave. CoreWeave went from very negative margins in 2022 to positive adjusted EBITDA in 2023 and then higher in 2024. Nebius is earlier in that journey, and when you look at the cost structure, the story gets even clearer. In Q4, revenue was about 270 million. Depreciation and amortization was about 181 million, roughly 79% of revenue. Operating expenses were about 462 million, roughly 200% of revenue. Those numbers tell you the company is still in heavy build mode. Spending is large, revenue is growing, but not yet to the scale where the full business prints strong profits. So my takeaway is not that Nebius is bad, it is that the profitability narrative is too early. I know many investors like the team, the engineering talent, the execution potential. I'm not denying the soft strengths. I'm saying, based on the current financials, I do not personally feel comfortable buying Nebius. And I also do not buy CoreWeave right now. Not because I hate the companies, because I want a cleaner margin profile and a clearer path to sustained profitability. So let's summarize today in one line. Satellite communications is waking up again, and Spectrum is the hidden lever you cannot ignore. Palantir is volatile, but the business trend is still strong, and bearish headlines might hand you better entries. Nebius is improving, but that 24% margin headline is segment level, not company level, and profitability is still a work in progress. If you enjoyed this episode, hit like, leave a comment, and subscribe. Tell me in the comments. In the satellite communication group, which name are you watching most and why? I'm Lynn, and I'll see you in the next video.